Alrighty guys, welcome to a new video. In today's video, I'm going to do a little bit of back testing. I'm going to do either 1 or 2 weeks, including both the London session and also the New York session. I've gone back to a random point in time, so I've chosen Feb of last year. You're going to see how I trade in terms of my macro strategy, but I also do trade other things too. I do trade market structure. Macros is probably about 85 or 90% of how I trade. So we're going to talk about that today. We're going to start off with a $50,000 account, and we're going to start off here. Now, this here is the London session. Right away, I think of a range, right? From low to high, and price is tapped into this bottom portion. So my idea would be seeing if price does this, and then sells, sells first and then pushes higher. So that's what I'm looking for there. We're inside of this volume and balance area too. This looks pretty nice. But now I'm just waiting for the key signatures. So you're going to see today as well when I risk less and when I risk more. Because a lot of people think that I risk the same on every trade. It's not the case. If the trade is A+, I'm risking more. If the trade happens outside of a macro, then I'll risk less. Does that make sense? So it's just one of those things. But that's what I'm looking at. So let's have a look here. We're in the macro. Let's play this out. This is the 150 to 210 macro. But we're waiting for impulse. It's all we're waiting for, because this is a spot where I want to see price react from. But we need impulse. Let's speed it up a bit. Okay, that looks pretty good. That looks pretty good to me. This setup here, to me, is A++. Why is it the case? And I'll leave a checklist down below, actually. If you haven't downloaded that, it'll be in my free Discord, so check that out. A free checklist. This is everything we need. So we're delivering from a new week opening gap, I think, or a new day opening gap on the 15-minute chart. You can see that here. Perfect. We're also in optimal trade entry of the range. Perfect. So what does this mean? This means that I'm risking more in the setup. So let's assume typically you risk 1%, or typically say you risk 0.5%. This here would be a 1% risk trade for me. It just would, because there's more probability of this working out than it not working out. Stop goes below here. And I'd, to be honest, try and target like a 1 to 1.5. That should be feasible. Place that order, risk 1%, save that, and let's see what price wants to do. Tapping back in. Tapping back in. Okay, and I'm going to talk about mitigating my risk too as we go through. So I'm going to move my stop just here now, because I don't want to see price come too much lower. Okay, now I'm going to move my stop up here, because I'm in with high risk. So now I'm risking a little bit less. I'm only risking $190. Okay, now I'd trail my stop like this, because I'm not going to take partials. I'm going to talk about what I do here. So I trail my stop, probably say you're in a funded account with Top Step or something like that, trail it to here or under here, for example. I like to go for at least 10 handles, so I'd probably trail it underneath there if I wasn't taking partials. Okay, and then I'd do this. I'll trail it underneath this candle. Eventually it's going to come back down, but we're trying to squeeze as much juice as we can out of the trade. So, okay, and then we do this. And probably at this point, like, what are we at? We're at 801, so I'd probably be very aggressive with it. 556, I'd probably do like halfway of this range, or just take it off here. To be honest, let's just take it off here, because we could go to the highs, but I want to take some profit. So let's remove that. Save it. That's it. And we'll see what happens. We'll see if price actually does come and sweep those highs. We come a little bit higher here, but then we start to pivot back down. So it would have been stopped out for less anyway. So good decision. But yeah, that's an A+ setup. So I risk more in A+ setups, just so you guys know. That is an A+ setup. So you can see how that looks. Now let's go to the next session. Let's go to New York session. And we'll just speed this up. So what I want to look at is actually 9:30 open. And then I'll look at the first macro and then see if there's anything there. I do sometimes, or when I used to trade New York session, I did like to look at, the Judas swing kind of setup, which is fine, but we'll see what price wants to do. Okay. So now I see this as a range from low to high, and we're going to do a whole week. So what is this? This is Thursday, the 1st of Feb. So do like a whole week of price action. Both sessions. So we're in OTE. We'll just see if we want to react from here. There's probably like a 15-minute gap or something under here too. So this could be a reaction point. If we break through this, then we're just going to have to wait and see what price wants to do. But we'll just play it out a little bit. Okay. Looks quite nice. Macro's coming up soon. We've swept the sell side like this. Swept the sell side. So we've done that. It looks all right. It looks all right, to be honest with you. Like this one here, we've inverted this space. We've come back into it. I think this is not a bad trade here. From where price currently sits, put our stop there. See if we can, target these highs, but look for a 1-to-1 at minimum. Place the order. I'm going to go normal risk on this one, right? Just because the candles are very volatile. So normal risk, and then more risk would be either 1% or this amount there. So that's how I'm going to judge it. Okay, don't really like that, but we'll see what price wants to do. Because typically you'd want to see that hold. Okay, so what's price doing here? Mucking around. I'm going to move my stop below this candle now. Let's keep playing it out. Okay, we're coming up. I'm going to move my stop up here. So notice how I'm mitigating my stops, because if price is going to be choppy, I don't want to be in a really big losing trade. I'd rather mitigate my loss and come back later and take another one. Okay, let's see. Okay, stopped out. That's fine. Now, we're still about, 5 minutes from the macro. So because it's very weak, we may have to reattempt the trades. Let me just have a look here. Let's see. So the macro, we're now in the macro, so it's quite interesting. Okay, another sweeper sell side. So that's our second sweeper sell side right here. Boom. And we're in the macro now too. This is a 15-minute gap. Okay, again, there's probably some news on this day, I'd assume. Okay, cool. Now, I like this because notice how this gap, it's a 15-minute gap, and where else are we going to move from? If we're going to move from somewhere, we're going to move from here. So to me, this deserves, again, more risk. Why? Because we're in the lower portion. It's the same setup that occurred during the London session, but it deserves more risk. So what we're going to do, we're going to take a long from here. Stop's going to go probably at the halfway point of that wick, and then we're going to try and ride it as high as we need to, right? We're going to place the order 1%, which is again $500, and then save that. And we're going to play this out. Cool. Now, I'm going to move my stop below this candle. Let it do its thing, let it do its thing. Cool. And to be honest, I'm going to move my stop now into a lot of profit. So what's that, about 6? We'll go 500, right? Because the idea would be to capitalize on at least a 1-to-1. So we're going to do that for at least a 1-to-1, probably the candle's wick, and then we're going to try and hold to these highs. So that's what you can do. Like, I'm not taking partials here. Typically, I'd take a partial and then I'd hold, runners. But if you're not going to take a partial, say even with one contract, one mini, one micro, this is what I'd personally do. And that way, at least you still secure something. And then I'd move this stop up like this, and I'd keep trailing my TP like that. I'd let this candle do it at once. Let it do it at once. There we go. So pretty satisfied with that. You can see same setup, determining when I want to risk more, risk less. Risking less here because it's not in a macro, but also because it was a bit choppy and I knew I could get wicked out, but just need to reattempt the trade, and that's completely fine. So there's Thursday. Let's go to the next day open here. So next day open, and then we're going to go to the, let's have a look, next session. And I do trade Asian session too, right? But this just shows you the concepts work in any session. I used to trade New York, but yeah. All right, very choppy here. Let's just zoom through, I think. I'm not really too interested at this point. Let's zoom through here. Go to next session. Friday, yeah, perfect. All right, cool. It's just ranging, so I'm not really too interested at the moment. We can take a look at the 15, but look at this massive gap. I'd probably want to see price do something like this, guys. Step up, do this, and then move higher again. So we'll just kind of see what we want to do. We'll zoom in again, and we'll let price do its thing. And yeah, if you like these videos, again, let me know. I don't typically back test for myself, but this is just a proof of concept to show you that this works. You don't need a high win rate. You can have 50%, but if you let the winners run and you hold on to trades and you trail your stop like that, or you risk more on some setups, it takes time, then you can end up quite profitable. So that's the key. So we're not in a macro now. The first macro did its thing. We're in the bottom of the range here though, so I'll mark this out. Look, so we've got a range high here, and we've got a range low there. So we could see a reaction here. If not, we'll dip into this and then look for a buy position from there. Just depends what impulse we get. That's all it is. Okay, that's that low there. That's probably Asian low, I'd say. Yeah, Asian lows. Okay, now look, here's the thing. You might miss an opportunity. You might go, oh, I missed this opportunity, because right there looks pretty nice. So what I'd say is this is still a decent entry, but you'd have to risk less because you're entering higher up in the range. You're entering from here, for example. You stop, I'd probably place it like here, and then I'll just go for a 1-to-1 like this. I'll do that. So place the order, I'll do this, save that, risking about 250. And then now I'd probably move my stop to break even. Break even. That's cool. And sometimes that'll happen to you as well, where you get stopped at break even, price will still develop in your favor. So you've got two options, right? You can re-enter the same trade if you believe in the draw, which I do, or you can just wait and come back later. So now like this as an inversion gap right here. So this could be another entry to go long. Stop would have to go here. But again, would this be a high risk reward trade? No. Would it be a high risk trade? No. This I'd probably risk even less on, because why? We're higher up in the range, there's more chance that the price might want to reverse back down. So you're just mitigating things as price is playing out, guys. That's the main thing. We'll try again. Right, we'll go to break even here. I might actually just put it below this candle, so that way regardless, there's a little bit of profit secured on the day, and then we can come back later. Cool, there we go. So that's how you do it, right? You don't have to win every trade. This trade entry would have been the best, to be honest, and that one would have been, you know, fairly high risk in terms of what we're looking at, but you'll see the same patterns repeat. But let's go anyway to the next session, into the New York session, and we'll speed this up a little bit. Speed this up until we get to 9:30. But yeah, that's how I trade. I trade discretionary, but also using macros, market structure, low resistance, all the rest of it. We'll let the market do its thing. Whoa, that's interesting, isn't it? So when you have those kind of candles, yeah, you just got to be careful. You know, like with this, we go to the 15-minute chart. I'd assume we're going to move lower now, unless we, you know, somehow respect this rough area here. So I'll mark that out, and then we'll just go to the 15-minute back to the 1-minute chart. And we'll wait for, well, there's a macro here. This is 850 to 910. Right, so I'm just going to, yeah, I'll play it out. Because all macros can work, right? So this is the interesting part about it. Okay, 9:30 open. That looks pretty good. Now, why does it look good to me? It's the power of 3, it's a Judas swing. So we've come down, we've swept that sell side. We've reacted back up here. I really like that. Long position from here. The best entry would have been here. So we're going to have to do this with a stop below the low. We're going to target a 1-to-1. And we're probably going to risk on this one just a 0.5%. So save that. Reduce the stop. Okay, now I'm going to move my stop up like this. So notice how I'm like risking less and less as the trade does its thing, because I don't want to like be in a position that's, you know, not working out and then not have my risk mitigated. Okay, so now I'd probably do this like that. And because of how we're playing out, I might even move this up a little bit further. Okay, it's fine. So we did go up higher, obviously, but I've mitigated that very aggressively. We'll take that. That's completely fine. But yeah, you can see what happened here. We reacted from that 15-minute space that I drew out. We had a power of 3, the sweep. This is using the 9:30 to 10 Judas swing. So again, not necessarily the macro, but again, I used to trade this as well. 9:30 to 10 Judas swing, or you can trade the macro. Both work, both are fine. But to me, that's the best setup there. You can see how we react. Let's go to the next day open. So next day open here, let's have a look. Let's go. Let's see. So next day open, this is the Asian session. So that was Friday. Cool. We'll do a little bit more in terms of this session here. We've been going for about 14 minutes. We'll go for a little bit more. So let's go to the next session. Cool. All right, what's price done? We've stepped up. We formed a range. 15-minute chart. We've swept that high. We've swept that high. Okay, we could reprice low. We could. After accumulation, there's usually some kind of expansion. So I'm just going to probably let the market do its thing here. Let's go to the London session, sorry. Yeah, okay, cool. Let's zoom in a bit. Okay, let price do its thing. So we have, like, here's the thing, we have pulled back up into this range. We could sell off now, but I need to see a bit more impulse. Interesting. So this looks decent. You can see this area here. I want to see a closure below this area, so I might slow this down. Otherwise, not interested. See how it's finding support there? So I want to see that broken. This is obviously outside the macro, so I'll risk less in the trade. And usually I'll scalp it, or like I can still hold runners, but I'll just risk less in the trade. So there, the thing is now we're building all this low resistance. So if I was to enter a short, it'd be a very low risk trade in this situation here. And let's have a look. Next macro is coming up. All right, I'm glad. There we go. We found support. So we pushed high from that area, but I don't really trust that as of yet. Okay, we swept that high. Perfect. Let's move across. Now I'm probably looking at this range from high to low. So I'll draw a Fibonacci from swing high here to swing low there. And yeah, we're sitting in OT. We could react, but we could come higher. So there's this 1 minute fair value gap, which I'll show you guys anyway. I'll just use my fingers here, zoom in on the screen. That rough area. So we'll see if price wants to react from somewhere up here. So this could be good. Just need to wait. Okay. Now this looks pretty good to me, right? Now what I'd probably do is I'd risk less and then pyramid into the position. So what I'm going to do is I'm going to place an order. We're going to go short position from here. Stop's going to go above here, and we're going to try and see if we can, target these lows. We'll place the order. We'll go for a little bit less risk, so we'll save that. And then we'll just let price do its thing. Because it's a very early on trade, so I'd probably close that, to be honest. Get rid of that now, I don't like that. And let's keep watching price. Wait for a little bit more. Okay, so we're coming back down there into that range. I'm gonna wait for something else, a bit more confirmation. See if we can invert this. Cool, now this deserves more risk. Okay, so let's do this. Stop above this high. Let's try and, write it down here somewhere. Place order, normal 0.5%. And then we monitor. Cool, move our stop, boom. Okay, move our stop, boom. Okay, interesting. So it's an interesting reaction. I'll consider closing if we come too close. Okay, I mean, we're only risking $92, so that's fine. There we go, cool. So 2 little losses. This here could have been a nice little scalp, but again, not taking partial, so still mitigating that as we go. We are not, we are in a macro, so we'll let price do its thing for the meantime. We'll see if price is going to want to reverse back up now because it's quite impulsive. So we'll let it do its thing. Because it appears, yeah, we're going to be up. Yeah, there we go. So now what I need to do is I need to wait for more price structure to develop. So this here, I mean, here's the thing. This here, if you're just going for one-to-ones and a partial, this here would have been pretty close to your one-to-one. You may not have got it. Probably would have been a break even. You may have gotten it. But here I'm trying to illustrate if you don't take partials, what happens, There's different risk management strategies, of course. Let's speed this up a little bit. Let's speed it up a little bit. Okay, so interesting. Nothing yet. Watching. We're building. We'll see what the next macro does. We're in the next macro here. Looks pretty good. This looks good. Now you might say, why does this look good? Because we've got multiple drives higher. We haven't swept this buy side liquidity point. See that? And I often notice that where we have multiple drives higher, we don't sweep the buy side. This here is a change in the state delivery. That's what I call a CISD. So I'll be using a CISD entry. I like this as high risk because I believe price can really move lower. That's my opinion based on what we see here, 3 drives. So we're going to go short position. I like this. Stop's going to go here. And we're just going to simply target probably a 1 to 1.5. We'll try to go for more if we can, but we're going to do, yeah, save that. And let's play it out. So this is quite nice. All right, let's have a look. Okay, cool. Now my stop's going to move here. Be quite aggressive with it. Move it here again. Okay, stopped out. Let's have a look. Interesting. So I don't want to get caught in seek and destroy here, but we're still looking and we're still liking, you know, what we're doing here. I'm going to reattempt again. I still think this is A+. I think this is going to be the true move now. Let it do its thing. Same kind of risk. We're going to risk 1%. Same kind of deal. Save that. Okay, cool. And then I'd probably take it off there, right? Or what we can do is we can actually, I might do this, bring it above this candle. So regardless, we're going to pull out 465. A few little losses, but able to mitigate some of those losses, which is the good thing. So let's do that. Okay, we're going to move our stop again. Probably here, nice and aggressive. Cool, that's it, right? So you got to know when to put risk on and risk off. You will have risk on situations like this where you get stopped out, but by mitigating risk, you allow yourself to come back for another trade. I'm happy to take 2-3 losses, but still, you know, continue trading, because if I have that draw on liquidity and I have the reaction, I'm going to take the trade. Let's see if this would have gone any lower. There we go. A little bit lower, and then let's see if we sweep this low, or if you just muck around. Let's have a look. We'll give it another couple minutes. But yeah, a lot of people are curious, right? This is how I do it. You know, risk on versus risk off situations, because some market conditions are favorable for your model. You need to know that, understand that. Other market conditions are not. Let's go anyway to the next, we'll go to the next session. Yeah, next session. And if you don't like it, just risk less. And if it wants to run, you can take more from it and hold runners, or you just take less from the market. It doesn't matter too much. So let's watch this out. Looks like the price is moving all right so far. Right, we'll look at 930. I'm always looking at ranges. Okay, 930 is coming up. Cool. So we've come up here, back into the range, back up into this range. We'll just kind of watch price a little bit. Nothing really gets my attention here. Just chopping, chopping, chopping. Chopping, chopping, chopping. So we're in the macro now, of course. Yeah, I don't really like this. 10 o'clock news. Yeah, we swept all those lows out now. All the internal lows. We might have to go to a 15-minute chart. And this would be the last thing for me. Otherwise, yeah, we have to wait. There's another 15-minute gap down the bottom here that we look for reactions from. But you can see what it does now. Look, we step up into OT, we sell off, right? These are the best sells here. But I don't really like that structure. So let's have a look. Now, yeah, let's go to the next 15-minute chart. And let's mark out this. That's all I do. That's all I do. Okay, boom. And then we'll wait for the next macro too. If nothing happens there, then we'll just call it for the day or for this session. Okay, that's permissible. That's permissible. If we just do that, that's permissible. And I'll explain why in a second. We just need to react. That's the main thing. So patience, patience, patience. Okay, there's nothing there, no reaction. So back to the 15-minute chart. Now I'm looking at a big, big range from low to high, and I'm going to mark this out. This will be the last kind of thing in this macro using this and price dipping into OTE. So that'll be the framework. And then obviously there's a fair value gap here. We don't have to tap into it, but we can. And then going back to the 1-minute chart. But this would be lower risk this setup here for sure, because we just mucked around for too long. Alrighty, so let's have a look. So we're about to approach the macro, coming up in a second. I think we're in the macro now. So what I'm kind of watching is, yeah, do we react from one of these gaps? People think that I will short any fair value gap. I won't. A lot of trades I take are reversals unless there's something very clear. But I prefer just look for reversals 70% of the time and be patient with it. Okay, let's have a look. Okay, so my curiosity would be, do we push higher impulsively now? Yeah, cool. So that's a nice sign. So what we're going to do, we're going to go for a long position from here. But we're going to risk a bit less on this because we're entering later in the move. And we'll probably just go for a scalp and we're going to place the order but risk less. Does that make sense? So we're not going to risk much on the trade. Because of those factors I pointed out, we're too high in the range, which makes it a little more risky. I want to see price expand higher, so I don't want to risk too much. I'm going to put my stop here now. If it doesn't expand higher, then we take a small stop out. I'm going to do this, probably move up here now, or to break even. And it looks like we may get stopped out. Let's have a look. Yep, that's fine. All right, so that's it. So that one there, very small stop out. We'll play it out to see what happens at price, but didn't really like that too much. Do we go up? We do. And we eventually keep pushing higher. So here's what it is. Sometimes you'll get the entry, sometimes you won't. Sometimes you'll mitigate the stop loss and you'll be in the trade. Sometimes you won't, but overall pretty happy with that. Let's go to the next day. So next day, let's have a look. So next day open is here, you can see. Let's go to the next session. I want to see the London session. Cool. All right. So what has Asian session been doing? Stepping up, still kind of playing this range. Let's have a bit of a look here. Yeah, so what we could do, we've swept these highs out. We could reverse back from here, but I need to wait and see what price wants to do in this area, I think. Cool, now we swept that high. At least we're being a bit more aggressive. I need to go to the 15-minute chart because the internal high has been swept. There may have been longs from here, right? But we didn't take those. So what we're going to do is go to the 15-minute chart and have a look now at this. Okay, so we may not even want to sweep that high. We're coming very close to it, but so it makes it quite interesting. All right, slow this down a bit. I mean, the macro is coming up soon, which is interesting. So what I'll do, I'll trade pretty much until I take the max losses or the max win. That's pretty much it. Now this could be right here because I think, is that a sweep of the high on the 15-minute? It's close, but we swept the bodies, which to be honest, I like that. I like body sweeps, and we'll see if we want to sweep the bodies and the wicks too. Yeah, so what I'm looking at here is, do we invert something with displacement? Yep, that's enough for me. So let's go short. This is like a rejection block play. I'd probably do this, and I'd probably do higher risk on this one, but a 1-to-1. Why? Because I'm using that as a rejection block, and we've got plenty of low resistance. So I'm going to risk the 1%. Save that. I'm going to move my stop here now because I don't want to see price wick into that gap. I'm a bit concerned about that. All right, see what we do. Okay, I'm going to move to break even now, or above this candle. Break even. That's all right, no problem. So now what I look at is I have a look to see what price wants to do in this area. Are we in a macro? No, but kind of within that 5 minutes, 5 before, 5 after. So what I want to see here is, does price tap back into this and reject, or do we come back down here and then start pushing higher through this area? That'll be the telltale sign. So this could be another re-entry to go short, in my opinion, but it'd be a lower risk trade because it's a continuation of the first one. So we'll do something like that target at least 10 handles, and we'll place the order, save that. We'll move this down a little bit more. And I'm going to move this above this height. I don't want to risk too much on this trade. Don't want to risk too much because I know it could muck around quite a bit here. Cool. All right. So that's good. Smaller stop out there. We're going to wait probably till the next macro, and we're going to see if we can get anything in that one. We're still hovering around that high, which is quite interesting. Let's wait for a little bit more. I like that. I like that. Now, in this situation, you go, why do you like that? Well, we've hovered around this rejection block, but we don't want to go any higher than that. And we've also swept this body right here, showing me that price is not really bullish. It's not. This isn't a macro, but I do really like it. We've inverted this gap at the top. We've inverted these spaces here. So I'm going to go for a short position like this. Stop is going to go here, and we're going to target a 1-to-1 risk to reward. This is going to be with full risk again. I just like this setup. I like the structure. I like the market structure that we've been forming. All right, let's have a look. Cool. Again, let's drop our stop. Again, this is what you do. If you're doing high risk plays, you have to drop stops quick. Okay. And here you got a decision. Do you pull out or do you stay in? I'd probably pull out, close that. Say see you later. And we'll keep watching. I can always look for a re-entry. Remember that. Okay, we're going to try again. Short position from here. Stop's going to be very tight. And we're going to do the same thing, same level of risk. Save that. Let's do that. Cool. They can be painful days, painful situations, right? Where it comes very close to like your level and it just reverses. That's fine. You just have to be patient. Okay, now I'm going to go to break even and accept whatever happens. Cool, that's it, right? So you don't have to win every trade. I'm showing you that here, guys. Like the win rate, we'll have a look later on, is not, it's probably 50, 60, 65%, somewhere around there, but the winners are bigger than the losers. That's the main thing. And this takes market experience and market time. So again, that's sufficient. Let's see what price does if we play that out. We come down a little bit more and then we muck around a bit. So probably good that we took it off there. You get me? So that's the thing. You take what you can and you take what makes sense to you. This is, again, demonstrating with no partials. I'm using like one set. I either take the TP or I take a break even or I take a stop out. That's the main thing. So let's go to the next session. And of course, I'm trading two sessions here. Typically, I wouldn't. Typically, I'd just trade the London session on one account, the Asian session on a separate account, and then anything in between is separate. So just been trending down all day now, which means, yeah, reversals back up could be coming, which they have. Now let's look at 9:30 open. Where are we? Let's have a look. 9:30 is coming. So I'm looking at a range, high to low now. This high and these lows. We're in the top portion of that range. 9:30 comes up and do we sweep this high? Yes, we do. And this could be Judas to go lower, essentially is what I'm thinking. Accumulation, manipulation, distribution. Could be. That's enough. That's enough, right? So let's go short position from here. Let's go stop above the high. Let's go for a 1-to-1. Yeah, cool. Place order. I like this trade, so I'm going normal risk. I'm going to move my take profit down here. Just going to observe price, let it do its thing. Move my stop above this body. Cool. Move my stop a little bit lower. Cool. And here you got an interesting thing to consider, right? Because we're risking that amount. I'm probably going to move my stop to break even. So regardless of what happens, like what's this now? Or you can move it here, right? You can move it there or you can move it to break even or like pull out a little bit of profit because you could reverse back up from here. Okay, so now we're at 543. I'm going to do this. Right, so this is what I do again, trail above the candle. Do the same thing again. Cool, that's it. Perfect, right? So we're just trailing our stops. We're using the power 3 there. That's a Judas swing. New York has a lot of good setups like this. Like New York session, I'm a little bit jealous because the times are a bit too late in Australia. Really easy kind of power 3 setups that you can take advantage of, especially if you scalp. You know what I mean? If you're looking for shorts, you scout the range, you know what I mean? You'd be sweet. All right, now let's go to the next day. So what's this? This is Tuesday. Go to the next day open. Let's have a look here. And we've been going for about 35 minutes. So I'll go for maybe about an hour, 45 minutes in, and we'll see how we go. All right, let's go here. Go to next session. And usually we have to do a few of these. Yeah, go to the next session. I'm not familiar with the platform, to be honest, because I haven't really used that much. So forgive me. All right, market structure. Let's have a look. So we've done this. We've gone up like this, pulled back down into this space. Could be a power 3, accumulation, manipulation, distribution. So we could look into that. 15-minute chart. Have a look here. There's a 15-minute FVG. Pull up a Fibonacci from, from low to high like this. We're in OTE. So yeah, we could look for a pull up or push back up, I could say, or should say, during this time frame. So this would be something that I would consider. I just want to wait for one more candle. So you could go long here, but the risk is that we reverse from this gap. So I want to wait for a little bit more. Because we should expand higher, like with an impulsive move, if you want to move higher from here. So that's why I'm waiting. So now we're outside of the macro, but we're still in that inversion, which I've marked it there in purple. Interesting. Looks a bit iffy at the moment. Looks a bit iffy. Now we're pulling back. Oops, let me stop. Let's go back here. We're pulling back into this range from low to high, low to high, low to high, boom, and then boom. We've come, yeah, below equilibrium. So I don't mind this. I'm going to go for a long position here. Like that, right? Boom. Place order. Place order. Place order. So that's risking 150. Yeah, save that. Cool. I'm risking less because it's like an internal range, if you're curious. All right, stopped out. Waiting, patient. Waiting patiently here. And we're about to approach the next macro. So you'll see some good setups happen in the macro, some don't. Some will happen before, some will happen after, some will happen, at different time frames. You get me? Like, so you got to trade macros, you got to trade market structure, but you got to trade what makes sense. How do I know when to risk less and risk more? Well, I don't know exactly, but I've just found a way over the last 2.5 years from, I guess, trading, data collection, and making a lot of mistakes and failing a lot, what works and what doesn't for me. And so that's what I kind of use there. So I'm just waiting for any impulse. What impulse do we have? That's the question. So we're in a macro now, almost 3 o'clock. We'll see if 3 o'clock has any impulse here. Okay. So that looks pretty good. We swept the sell side. We have failed to take out this low, which means that's a failure swing low. We've swept the internal sell side. We've inverted some spaces here. I might get like a close proximity entry. Take a long position from here, place a stop below this candle, go for a 1-to-1, give or take. Place that order, risk about that, save, give or take. Let's have a look. So I'm just observing. I'm going to move my stop here. I don't want to risk as much anymore. See how it's just mucking around too much? Don't want to risk too much. Okay, now I'm going to watch again. Okay, this now deserves more risk because we've come back down. We've swept the, the sell side. So this here deserves more risk. Place order. We're going to place the order here, 1%. Save that. Okay, let's do this thing. All right, stop that again. And you might be here thinking, oh, what do I do now? Like, you're so close to the 53,000. Just be patient. Just wait. Just wait for the setup to form again if it does form. All right, so we're coming back down again. Let's have a look. And this is the reality of trading, right? You're going to win some, you're going to lose some. That's how it goes. But you have to be level-headed. You have to be level-headed through all of it. So let's have a look. This is going to be another attempt. Same idea, right? And this will be the last one. This deserves full risk, in my opinion. This will be the last one. Place order, save. If this one loses, we'll come back into the next session. So a lot of mucking around at this point. Okay, so the stop is now going to be moved here. Going to bring that up a little bit. Okay, we're going to move our stop into break even. So worst that can happen is break even now, which it is what it is, right? Okay. Move that up a little bit. So now we're going to secure a little bit of profit, but obviously we've lost a bit of money before. So we've got to manage that risk. Okay. And then I'm going to move this up like this. That's it. That's pretty much it here. Cool. So notice what I've done then. I've mitigated some of my losses. I've come back. I've trusted the framework. You have the option here now, if you still feel mentally, I guess, sharp, you can look for another opportunity. Now, what could be happening here from what I can see is, see, we should have pushed expansively to this high if it was a power of 3, but we're not doing that. We're hovering this last gap. So my curiosity would be, if we do invert this space here, could we now look for a short back down? That would be my curiosity. And if we don't, then we move to those highs, right? So that's my curiosity here. And we need some impulse, otherwise I don't really like anything. So nothing really there, just tapping around, mucking around a bit there. So it looks like we're going to go to those highs. There we go. So it was a little power 3 situation. We capitalized on a little bit of it. You can see originally, I think what we're doing here, we're going for long positions. We got kind of clipped out. Then we, took those other trades and we mitigated that risk. So at this point, you're best off just going, look, come back to the next session or come back the next day, right? And then we can look at that. So let's have a look. Let's go to the next session. Let's go to New York. Where are we? New York session, let's zoom forward. So this now is Wednesday. So I think we went from Thursday to Wednesday. So it's almost a week of price action. That looks pretty nice there, to be honest. That there looks quite good. And here, we're just spooling to the upside at the moment. Okay, so what are we doing here? Everything is external. Be looking for these highs maybe to get swept or like a reaction very soon. Maybe a power 3 scenario. Accumulation here, potentially. Okay, 930. Again, power 3 scenario, let's have a look. I want to see one more candle, and then I reckon I'll go for a short. That looks pretty good. Now, if we zoom out here, we can also see we've swept this buy side. Right, so we swept all the internal buy sides. So this to me looks pretty A+. Let's go for a short. We'll do that. Oh no, we'll do that. Go for a better 1-to-1. On the trade, place the order. I like this. Really do like this. And we'll just play it out candle by candle. All right, bit wicky here. Let's reduce our stop. Let's have a look. Mucking around a bit, guys. Okay, let's go to break even now. There we go. So we're going to conclude it there, guys. Today, hopefully you've learned something. 53,000, 3,000. So for most prop firm accounts, that is passing an account. Using a mix of 1% risk, 0.5% risk, like changing it up. Of course, this can be minis, it can be micros, whatever you need it to be. If you like this video, if you want more videos like this, feel free to let me know. But what I'd be curious to do now is just to check the stats on this actual data set. So let's get into that now and then we'll conclude this video. Alrighty, so analytics here, we've got, like I said, 52.38% win rate. So you can see that, total P&L. We had, a few areas where we're just kind of cruising and then we've pushed up and then pushed up. We've got the average risk to reward. It says it's underneath a 1-to-1 RR, but we did hold some more there too. Total winners, total losers, best win, best loss, total trades, buy and sell. Max consecutive losses was 3. Max consecutive wins was 4, which is better. Little pyramid here. Average risk to reward, fair enough, bit of a mix. Total profit and loss, performance by day, and that's about a 6% gain. So pretty decent, right? Pretty decent. That was Thursday, Friday, Monday, Tuesday, Wednesday. So this would be like a trading week, and this is trading like an aggressive approach to the eval accounts, but you can see what that is there. Trades per day, trades per month. It's pretty good, this data collection, but this is to show you guys you don't need to have a 80% win rate. And some weeks this will be higher. So some weeks you're going to make a lot more and be a lot more consistent. Other weeks it's 52%, 60%, but it is profitable. So you can pass an account with a 50% win rate. With that being said, guys, if you've made it this far, I have had a great time doing this video. And for you guys that have made it this far, you get an early discount code. If you're curious or you want to join the community with the Discord, we do live sessions for the London session, but as you can see, this applies for the New York session. The code is end of financial year, EOFY. But until next time, guys, have a great week. Start the week strong and we'll talk soon. Peace.